Hey, everybody. Thank you very much for joining us today, whether it's morning, evening, afternoon, when you're watching this. I hope you're having a great day. We are here to bring you the topic of investing in mineral rights in today's economy, today being March of 2023. My name is Corey Daharsh. I am with Advanta IRA. We are a self-directed retirement account administrator. And my guest today is actually David Brookhouse with Eckard Enterprises. Troy was unable to join us today. Something came up. So David has stepped in. He is my direct contact over at Eckard Enterprises, and I'm very happy to have him here. David, why don't you go ahead and introduce yourself a little bit further? And if you'd like to provide your own contact information, feel free to do that as well.
Yeah, thanks, Corey. For everybody that tuned in to listen to Troy speak, my apologies. Again, he got tied up with another event, and I'm stepping in. But I'm David Brookhouse, and my role within Eckard Enterprises is I'm a wealth manager. And essentially, what that means is I'm the main point of contact between our existing clientele and folks like yourself who may have an interest in learning more about this space. And so the first step is really the education to make sure you're comfortable within oil and gas. And that's what I'm going to lay out here through our presentation. And then if it is a good fit, then that conversation extends to an allocation of assets that, we're looking to allocate to achieve your financial goals. But the number is going to be the same that you see on the slide right here with the 1-800-527-8895. There's Troy's email contact directly, but you can always visit our website at eckardenterprises.com and request more information.
All right, thank you very much, David. And just for the audience's sake, David is going to be going through the same presentation we had prepared, so none of the content is going to change today. It's all the same information that we had planned ahead to provide you guys, so I hope that you get some good value out of this, and we all welcome David for the presentation. Just some quick housekeeping information. All of the attendees are going to be muted throughout the duration of the call. I do implore you for sure to list any questions you may have in the question box on your GoToWebinar panel. We're going to hold those questions towards the end of the webinar, and then I'll go ahead and ask them to David and have him give some answers there. If you're on the live session right now, and you do have to step away, we will be emailing out the recording, and within about 1 to 2 business days, we'll also have this recording posted on our YouTube page, so you can go check that out at youtube.com/AdvantaIRA. But with that being said, what I'm going to do now is go over a little bit of information about Advanta IRA and how we support our clients and relate to the general topic here. I'm going to give a case study on how to make this type of investment, really pulling an exact example of an existing client that has an investment with Eckard Enterprises, just a very generalized version of that example. And then I'm going to turn it over to David for his portion of the presentation. So for the next 10 minutes or so, you'll be hearing me. I'll take it over and hand over to David after I've finished, and he'll take the rest of the presentation to talk more about Eckard and talk more about mineral rights investing. So Advanta IRA is a self-directed IRA administrator that has been in business on our 20th year right now. We've got just over $2 billion in assets under management. All clients' funds that are not actively invested are insured up to FDIC limits, and every client that we have is partnered with a dedicated client account manager. So you have a one-to-one white glove, if you will, customer service from our company. So you don't have to reach out to a call center or deal with a different person every time you want to talk something with your self-directed account. You'll get one person that you end up getting familiar with and that knows how to help you best and answer your questions best. I know from personal experience, I actually served for 5 years in that role with Advanta before I switched over to this education-driven role. It is important to just disclose to you that we do not provide any tax, legal, or financial advice at Advanta IRA. We're experts in the IRS's rules and regulations, so we'll help you strategize the deals that you want to make, and we'll help you coordinate the investments you bring to the table. But it's completely on you as a self-directed investor to do your own due diligence and consult your own team, whether it's attorneys, CPAs, accountants, before you enter any specific investment. Everything you're going to hear today is strictly for educational purposes. And again, please make sure that you do your due diligence. If you have not heard about self-directed investing, and maybe you're a mineral rights investor just learning from that side of it, or maybe you've just found our marketing for this webinar, self-directed investing has been around just as long as your stocks, bonds, and mutual fund investing options in your IRAs. Just not a lot of people know of it. Only about 4% of US-based IRA accounts are self-directed. So it's really just something that not a lot of people know, because those larger fiduciary or wirehouse custodians prefer to shy you away from these strategies, because it takes more money out of their possession to manage on your behalf and invest on your behalf, where really it should be something that anyone should be imploring you to do. If you are interested in doing investments that your current custodian will not let you hold, it's very simple to switch over to a self-direct plan, and very easy to get the account set up and started. So just reach out and let us know if we can help with anything further, and always share this information, if you can, with any of your friends or family members that may find value in self-directed investing. And just to look into what that looks like a little bit further, there are a number of different retirement plans that can be self-directed. Most of you are probably familiar with your traditional and your Roth IRAs, but you can also self-direct SEP and simple IRAs for small business owners, solo 401k plans as well for small business owners, and your health savings and education savings accounts can also be self-directed. It's one thing to note that your former employer plans, whether that looks like a 401k for you, or a 403b, or a 457, or a TSP plan, if you've left those employers, that money is very easily accessible to be self-directed. And there's also a chance that once you've left that employer, you're no longer benefiting from having your money sitting there, but they're also not going to tell you to, hey, come collect this money. So you may want to reach out to your previous account administrator, your previous employer, and get some information about the status of your former employer plans to see if you can't make better investments and better control of those dollars by self-directing them. And again, why are these IRAs and solo 401ks a good source of capital? Well, it's really easy to repeat investments. If you make an investment and it goes full cycle, it's very simple to redeploy those funds either with the same investment provider or a new offering with a new provider. We make it a very quick and easy process for you. If you're not expecting to use that money anytime soon, it's a great way to place your retirement dollars into a fund for maybe 5 or 10 years, or hold an asset for a duration of time where that money's otherwise going to sit maybe in a stock market or a CD or something, earning very minimal interest. Whereas if you are interested in other investment structures like we're talking about today with mineral rights, you can likely drive a much higher return on that money that you weren't going to tap into yet anyway, because you're not even close to retirement in many cases. And then the final reason that these are a good source of capital is that there's no outside approval needed. Again, Advanta is not a fiduciary or a financial advisor. We are simply a self-directed administrator that helps you follow the IRS's rules and regulations. So as long as you approve and decide on an investment, we will help you get it done. And you are the guiding force here. You're the fiduciary or financial advisor for your own self-directed account. So no one else serving as a big brother or looking over your shoulder or telling you what you can and cannot do with your money, with exception to just following the IRS's rules and regulations, which is actually pretty simple. And that's something I could definitely help you with at the onboarding process, just making sure this fits for your needs and your goals. Now, I've got 3 key takeaway points that I want everyone to either write down now or make sure that you have in your mind towards the end of this webinar. Okay, yes, I did learn these things and it's great information, but I try to put these at the top just so I'm at least planting the seed first. So, mineral rights are a resource for cash flowing passive income. So when you make a mineral rights investment, you're going to receive cash flow, if not directly immediately, within a very short time frame. That asset should be cash flowing deposits back into your retirement account that are generating tax deferred or tax-free income in the name of your retirement account. These investments are very simply structured and very easy and quick to execute. I'll go over that a little bit further in my case study, and I'm sure David can touch on that further as well. And then the asset ownership can be passed down to beneficiaries at the time of your passing. So it's not a type of asset that you necessarily need to sell as you're winding down and planning for your own end of life expectancy. You can leave these assets in your retirement account, and at the point that you pass and transition to the next phase, whatever you want to call that, the beneficiaries listed on your retirement account will receive ownership of these assets and be allowed to continue to reap the benefits of the cash flow that they're generating. Now, as I alluded to earlier, it is very important to invest with the people you know and be comfortable and do your due diligence. Make sure you're always using your network and expanding your network. If you're not familiar with that triad of know, like, trust, that is very important in the investment world, to know who you're investing with, to like those people that you're networking with, and to trust them before you actually put your dollars on the line and make any investments. To that effect, Advanta IRA does have a virtual networking forum every other Friday called Pitch, Promote, and Prosper. You can join us whether you're a client of ours, whether you've got deals to offer. It's not mutually exclusive. You do not have to have an account with us or have a specific offer. You could just sign in to see who's there talking and what you can learn from those people. We did host last Friday, so the next one will be next Friday, not tomorrow. The 10th of March is the next one. You sign up on our website at advantaira.com/events. The time is 12 noon to 1:30 Eastern, depending on the size of the group. There are people that sign in from all across the US and even internationally to either look out for what deals are on the table or promote their deals that they've got coming up or that they are currently offering. So feel free to check that out if that's something of interest to you. And now my case study. This is, again, a very generalized outline of an investment into a mineral rights deal. So in this scenario here, I've got Theo, who has retirement money, about $100,000 in a managed IRA, and he's not happy with the current returns. You know, the stock market fluctuation, it's just something that he's maybe not so comfortable with, and or just not getting the returns he was expected when he signed up with that managed IRA custodian. So he meets David, likely enough that our guest speaker today is also named David. He meets David, who's a mineral rights investor and investment provider, and they discuss some opportunities and agree in principle to an investment transaction. So David provides Theo with a purchase and sale agreement for a $100,000 mineral rights investment and a management agreement so that David and his team can continue to oversee the asset on Theo's behalf, or more specifically on behalf of Theo's retirement account. The next step is that Theo is going to need to open a self-directed account. So he reaches out to me, has a conversation, and sets up a self-directed IRA with Advanta, completes a transfer request form to have that $100,000 move from his existing custodian into the new IRA with Advanta. That's all typically facilitated within about a 1 to 2 week time frame. We would work with you hand to hand to make sure that's all done and the flow of money is done in a timely manner. And we will submit the paperwork, follow up, make sure that the previous custodian, whoever that may be, receives it and have it in processing in a timely fashion. Now, the investment process, the actual purchase and sale agreement and management agreement are going to be executed by an Advanta authorized signatory on behalf of Theo's retirement account in the name of Theo's retirement account, and we will only do that after Theo approves all of the documentation involved. So what we're going to help facilitate is listing on all of that documentation the proper name of Theo's retirement account and also the proper tax ID number for Theo's retirement account so that there's no issue down the line of Theo having a personal taxable liability for this investment. Once we have that all in good order, we'll make sure Theo marks everything as authorized and approved, and then we'll execute the transaction, send the funds over to David's group for the investment to be held. And then moving forward, as I mentioned earlier, all the profits are going to be sent directly back into this retirement account. The funds deposited will either go into that tax deferred or traditional style account, or a completely tax-free account if that investment was made in a Roth account. And they'll continue to grow in Theo's retirement account until he decides to make another investment with that cash or do whatever he may want to with that money that's been building over time. And then in the future, Theo can either hold that asset for cash flow and let it pass down to his beneficiaries when he passes away, or he can decide at any point maybe to sell his ownership for a lump sum payment exchange at the time that he processes that sale transaction and relinquish his ownership to those mineral rights. So David, from your side, I hope that generalized transaction case study did make sense and falls in line with how you see it from your side of things. I'll let you expand upon that a little bit further, but just give me 1 second. I'll get through these final 2 slides and hand the floor over to you officially. Just for the audience's sake, Advanta IRA does put out a lot of complimentary education. We never charge for our educational webinars or our podcasts or other content you may see us doing. So feel free to check that out. We have an events page on our website. We've got a very robust video library on YouTube. And we also have a blog you could check out if you're looking for some of the more nerdy industry news in the self-directed investing community. And as I alluded to there in my case study, it's very simple to get an account started. It only takes about 15 minutes or so to complete our application. We'll pair you with an account manager, and I'll hand you off very smoothly and simply to that account manager from the onboarding side to make sure everyone's on the same page. And for you, the investor, it's a very smooth and simple process, and you have a team behind you that you trust handling things on the back end. It's easy to fund your account. It's typically not a taxable event, or sometimes doesn't even trigger any taxable reporting. I will coach you and guide you through that process to make sure we do it as efficiently as possible. And like I said earlier, with the timeline, you can typically expect to start investing your retirement dollars within about a 2-week to 2.5-week time frame, conservatively speaking. That's getting all the investment paperwork in line if you already have a deal lined up. That's getting your money from the previous sources into your self-direct account and ready to go. So reach out to me for those steps if you'd like to get started. And having said that, I am officially turning over to David at this point. David, the floor is yours. I'm hitting that button that we went over earlier to give you keyboard and mouse control right now.
All right, thanks, Corey. And I just wanted to let you know on the case study that you nailed it. If we have any people that are tuning in that are considering opening up an Advanta account, I mean, we do have a ton of business with Advanta. And the process from opening an account to actually participating in one of our portfolios is seamless. But so again, my name is David Brookhouse, and I'm a wealth manager here at Eckard Enterprises. And I'm going to walk you through an asset class that is inflation resistant, that gets paid out monthly with annual returns between 8 to 30% yearly that I can almost guarantee you've never heard of. And this is just what the slide says, is the oil and gas mineral rights. We at Eckard offer direct ownership into these income producing assets that generate truly passive income for the next 25 to 50 years that can be passed down generation. So a little bit about our CEO, Troy Eckard. He got his start in 1985, where he worked with high net worth investors who wanted to participate in drilling oil and gas wells, which is known as working interest. Now, working interest is very boom or bust and carries a lot of risk. So he stayed on this side of things until 2018, when he switched gears and really focused on one single task: capital preservation. So since that time, our sole focus has been the acquisition of oil and gas mineral rights. And so really what this experience shows is you have someone at the helm that has been in the same industry for 36 years and seen several cycles, and has the knowledge and experience to handle any type of curveball you throw his way, whether that's within the industry or economically. So let's jump into it. What are mineral rights? Mineral rights are the first shovel dig down to the core of the earth. By owning mineral rights, you'll own all the minerals and resources located underneath the surface. Most of you do not have experience in minerals or familiar with real estate. Well, the good news for you is that they are simply the same in the eyes of the IRS, as they are both classified as real property and deeded and filed in the courthouse. So as a mineral owner, these rights create value when they get drilled and produced by an oil and gas company. The average oil and gas well costs anywhere from $10 to $20 million to drill and produce. Unfortunately, 99% of us mineral owners do not have the means to go that route. So what typically takes place is you sign a lease agreement between the mineral owner and an oil and gas company like Exxon or Chevron. And this agreement gives that oil company permission to drill and produce the oil and natural gas on your property in exchange for a return of 12.5% to 25% of all the revenue generated from the production without any of the cost. So again, as a mineral owner, you get a percentage of the revenue of every drop of oil and gas that gets produced from your property. Depending on the amount of hydrocarbons located underground, just like this picture, the minerals may be far more valuable than the surface estate. So not all minerals are created equal. What you're looking at are the major oil plays within the United States. Eckard focuses on two of these, being the Anadarko Basin, located in Oklahoma, and the Permian Basin, located in Texas. The reason for this is different basins are known for different resources or commodities. An example would be the Haynesville Shale, which is located in Louisiana, which is known strictly for natural gas. And when you're looking to identify minerals to purchase, you want to make sure you have a blend of both commodities to offset the price of one that may be lagging. So for an example, if I own strictly natural gas within the Haynesville and we have a mild winter, kind of like what we're experiencing now, I may be exposed to lower commodity prices and vice versa. So with that being said, we purchase minerals in Oklahoma and Texas due to it being a good blend of both. We don't want to get tied down to one commodity. So here's a picture of the Grand Canyon. This is somewhat similar to what we see underground. You'll notice those yellow arrows point to the different zones or strata that are pockets that actually hold hydrocarbons. Mineral rights really have only seen a surge in value over the past 15 years or so. I would say since 2007 to 2008. This is due to the introduction of horizontal drilling and fracking. The way we recovered oil and natural gas prior to that is to get as much data using seismic or geology as you can find and drill a single vertical well with 7-inch pipe and cross your fingers. The success rate on that type of drilling was abysmal, as you had to essentially be right on top of an oil pipe to make it commercially viable. Well, what horizontal drilling did was it allowed us to drill down 7,000 to 8,000 feet, bend the pipe, kick it another mile or two, and produce that entire zone. So the fracking is just like a jackhammer that breaks up all that rock underneath the ground and allows all that oil in the vicinity to seep down into that borehole we drilled and actually allows us to produce it. So this method has caused mineral rights to explode in value, as we're now able to drill and produce with a 98% success rate. So this is just going to be a visual of what I described that shows how horizontal drilling had caused an increase in value. So let's say you or I own the mineral rights in the surface of this picture right here, which is 1,280 acres. And pre-2007, we had an oil pocket, which we didn't know existed, but the oil company said, hey, this looks like we have oil on the property, that was located on the far left-hand side. Well, if that operating company drilled on the right-hand side, they wouldn't find anything. And so with the advent of horizontal drilling, you can drill the entire zone and utilizing fracking for the hydrocarbons for each zone. And so along with horizontal drilling, we're now able to drill deeper. So using the formations as an example, when they drilled that well 10, 20 years ago in the Springer, which is right underneath the surface, they may not have found anything. But we may have a huge pocket in the Woodford. And then so now with the horizontal drilling, they can drill deeper formations. If we're lucky, we have pockets of oil in every zone and formation, which is huge for a mineral owner. So looking at these two slides, you can see the lift in value from owning minerals 20 years ago as opposed to today. So what are minerals? Minerals are real property. They carry zero liability, zero capital exposure, zero holding cost, zero environmental, zero drilling, 100% passive, is paid out monthly, and like Corey mentioned, this is a legacy or generational asset. So as a mineral owner, we are the landlords of these operating companies. It's a one-time purchase with no cost obligation to the $10 to $20 million needed to drill an oil and gas well. No exposure or liability to any blowout or accident associated with the surface. We just get a percentage of the gross profits of everything produced free and clear. We are the landlords for these billion-dollar companies with no upkeep, liabilities, or costs associated with developing. Again, it's a free ride for mineral owners. I'm sure you're all familiar with Warren Buffett, the investor. Well, he owns over 20% of Occidental Petroleum, which is one of our operating companies. Before Mr. Buffett and Occidental Petroleum receive a dime in revenue, the mineral owner must be paid first. This is like having a commercial building with Facebook or Amazon as your tenants. So specifically to your self-directed IRA, what does it provide? Monthly cash flow into your IRA, tax deferred or tax-free income, and assets passed down to your beneficiaries outside of probate. So again, 100% passive income with no capital cost. Each new well drilled creates 25 to 50 years worth of revenue that's paid out monthly. And again, we pay nothing to have these wells drilled. For every section of land, we have the potential for 8 to 24 new wells being drilled in currently known zones. That doesn't cover any technological improvements we'll see within the years to come that will allow for deeper drilling. Because as I mentioned before, 10 to 15 years ago, most of these locations that we're seeing develop now were not economically viable to produce. So we can end up with substantially more wells, which creates higher monthly revenue and increases the inherent value of our mineral rights. So how would you like to have 1,400 employee wells producing income 24/7, 365 with no issues or complaints? Well, that's what we have in the minerals that we've purchased so far. This doesn't account for anything we're continuing to purchase. We have over 1,400 wells that we expect to grow to 5,000 to 7,000 once it's all said and done. That's 5,000 to 7,000 different revenue streams that can produce on a monthly basis for the next 25 to 50 years. Look, as investors, our goal is simple. Have as much money as possible coming in without any money going out. Mineral rights provide that it's a one-time cost again, and once you make your investment, you will start generating cash flow with no money going out the door. In Oklahoma, it doesn't cost you a dime to own mineral rights, no property taxes or upkeep. So here's what we send out on a monthly basis. We send these out to all our partners that are outside self-directed IRAs, but if you're investing through a self-directed IRA, we send these to your custodian just like Advanta. And I can tell you is that all these custodians know exactly what investment they're receiving because we send boxes and boxes of these on a monthly basis. Everybody loves the green envelopes. So why is it a good time to be in minerals? Currently, we have inflation running around 6.5%. Anything you have invested within your self-directed IRA that is producing less than that 6.5% is actually losing you money. Your purchasing power is shrinking and you're deteriorating the value of your account. You must know what's inside your IRA and decide if you need to reposition what you currently own into something that moves in the same direction as inflation, which is oil and gas. So here's a good image that goes along with the previous slide. Again, we have to take an inventory of our investments and how they're doing and identify erosion. Because just like these cement blocks, if erosion continues, those blocks are going to give way much like your portfolio and hit a much lower position as a result of simply not paying attention. So don't kid yourself, inflation is here and it's not going anywhere soon. Factors that influence inflation are simple. Yeah, production costs, supply chain costs keep going up, and it's demand. Nobody's slowing down. Everybody is still traveling and spending money. So you have two key components, shortage of supply and stable and possibly increasing demand, and we have a fiscal policy that keeps dumping money into our economy. As a self-directed IRA investor, I have to figure out what do I have to own that has a shortage of supply and increase in demand. And again, folks, that's oil and gas. The more this administration pushes green energy, the higher the commodity prices increase. We're killing the supply chain by cutting off the sector's capital, and we're having increased demand that we simply can't meet. We're currently producing 12 million barrels of oil per day, while our consumption sits at over 20 million barrels per day. This is only taking into account the US. We're not factoring in Russia, who can't supply as much as they were because of the conflict in Ukraine. We're not talking about the demand in China, now that we're seeing they're starting to open up. And we're also not talking about OPEC, who already openly said they would like a price floor between 80 and 90 barrels. So there's no incentive for these folks to increase output. And here's just another slide that shows that we added over 500,000 jobs to start 2023. This is just saying, again, inflation's here. So the only way out for this government is to inflate the dollar. If I owe China $1 trillion, the only way to pay them back is to inflate my 1 trillion into 3 trillion, take out that trillion and give it back to China. But what that does, it erodes the value of the dollar. There is no incentive for this administration to not see raging inflation for the foreseeable future. Now, this is a scary chart to look at, is because what this is showing is what's happening to your net worth. And that we have a chart that shows what 1% inflation looks like compared to 5%. Look at the damage to your net worth and purchasing power. There's a 30% difference in only 10 years. So don't miss the forest for the trees. If you keep looking at the trees, you may miss what's on the ground, just like that girl I just circled. I'm assuming most of you probably missed her. But the point being is that sometimes the answer is right in front of you. If you don't have a self-directed IRA, set one up immediately. Move your money out of your traditional investments like stocks and bonds and take control and invest in a hard asset that will not be affected by inflation. So here's my favorite part, which is our track record since we began offering our portfolios in 2019. So to date, we've purchased as a company over 30,000 net mineral acres. And what we do is we break up that 30,000 acres into bite-sized portfolios, if you will. And so what you're looking at right here is the name of each portfolio that we've opened and is currently completely funded and closed. So this is going to be a tangible asset as far as Eckard's concerned. This isn't a partnership or an LLC. You're going to buy direct ownership of these minerals. And then so these portfolios that are closed are all unique in the sense that they're all different locations. You're not going to have the same property or the same wells. They're all going to be different locations with different number of wells. And 99% of these minerals are located within the Anadarko Basin in Oklahoma. And so the green column is going to be the number of distributions. This is going to be the number of monthly checks you received. And the far right-hand column is our return on investment. And then so you can see our average return across all portfolios comes in at 18.3%, which is crushing inflation. And then so out of the 78 portfolios, 17 portfolios are less than 12 months old and 10 portfolios are not in pay, which I'm going to touch on in a second. But our 18.3% is factoring in those 10 portfolios that are not in pay. So it's weighing down the average. But when we look for minerals to purchase, every acre has to meet the same criteria. And so this is going to be different than real estate in the sense that you can't drive down the road and see for sale signs for mineral rights. And if you do, chances are that's not the mineral rights you want to purchase. So we have a large team and a dedicated acquisition team that identifies properties before we ever reach out to these individuals, because most of these individuals, mineral rights are owned by individuals. And the criteria we use to identify which acres we purchase is one, it has to be cash flowing now, meaning it's generating revenue and it's currently producing oil or natural gas. So they have a well on site and an operator that's producing that well. Number two is revenue must be between 8 to 12% yearly. If it comes below that, and this is over 5 years, it comes below that, we automatically kick it off. Number 3, it has 1 to 2 producing wells max. Early in the presentation, I said each tract of land had anywhere from 8 to 24 wells potential. We want to buy the underdeveloped and ride that wave as we see our revenues increase, as opposed to buying an asset that's pretty much peaked out, where you have, let's say, 12 wells, and for that section of land, that's practically it. So you're seeing a decline. Every mineral acre we buy has upside for new development, and then it has to be operated. So again, every tract of land that we purchase has a producing well located on the property. We're only hitching our wagon to the biggest operators in Oklahoma, the who's who, is because what drives our portfolios, and I'm going to touch on this later, is activation or new wells being drilled. So we want to make sure that we're tied to an operator who has the financial means and capability to continue to develop these properties and drill a ton of wells, because that's where we see our value. And the last thing is, it must have the reserves necessary for future development. Again, every property has to be producing, and where we kind of see our upside is for new development. So we have to make sure that there's room for new wells to be drilled. And we utilize landmen in the courthouse. We utilize geologists. Troy's experienced 36 years of drilling oil and gas wells. He brings that experience and that team to the table to identify the reserves off these drilling reports, to say, hey, there is room for expansion, there is room for new wells to be drilled. And so one of the biggest questions posed to me is this: David, how do I know which is a good portfolio to participate in? You just showed me a list of 78 portfolios. The answer is simple: participate in as many as you can. Again, every mineral acre is bought under the same model that I just walked you through. And activation is what we call new wells being drilled. The reason for the varying return percentages for each portfolio is the one downside, if you want to call it that, is as a mineral owner, you can't tell these oil companies when to come and drill on your properties. I explained that we have all the data and the team in place necessary to identify properties that have the upside, but we may have portfolios that will see increased activation between the first 12 to 24 months, which drive up those monthly returns. But we also have portfolios that may activate after 36 months. But here's the thing, is that we all know we're going to see new activity within the 5 years, and activation is a driver for our portfolio that turns these 8 to 12% into 20 to 30% returns. The key here is you're owning a tangible asset that will continue to increase over time. So mineral rights are the true definition of passive income. Once you sign up, you can sit back and relax knowing your monthly revenue checks are getting delivered. With all that uncertainty that's taking place in the markets, let mineral rights be the beacon or the lighthouse that guides you through the storm. And guys, that's going to conclude the presentation. I'm no Troy Eckard, but I hope that I was able to educate you on mineral rights and why they deserve a place within your self-directed IRA. And I'll turn it over to you, Corey, if any of the folks have any questions.
Yeah, David, thank you very much. I think that was a really insightful presentation. Some of the historical data you shared with what you guys have been able to do is super helpful as well. And just a general understanding for our audience of even what these investments entail and what they are made of. Definitely should have been a great resource for everyone that participated here. There are a few questions at this point, and just as a quick reminder, we've got a few minutes here where I'm happy to facilitate further questions. So if you have them and you have not added them yet, please go to your GoToWebinar panel. There's a box labeled questions, and you can type them in there. I'm going to go ahead and start with the ones that are currently listed. We'll get through them, and we've got a few minutes here to field some additional ones if you guys want to send them in. So the first one here, are the slides available? David, I don't know that I verified that with you and Troy yet. Are you guys comfortable with us sharing a PDF version of the slide deck today with the audience?
Yeah, 100%. And then what I advise anybody that's interested is go on our website, and we have a register button, which I failed to mention this, but this investment is only for accredited investors. But once you register and verify your accreditation, it's going to open up a host of educational videos that Troy does himself, is because we're seeing an influx of new interest because of what we're seeing in the stock market and real estate. And so a lot of you may not be familiar with oil and gas. So go on our website, and I believe we have this presentation on there. But yes, Corey, feel free to share it. But yes, I'll direct everybody to the website to watch those videos to learn more.
Perfect. So to that effect, you could either reach out to Troy, to David, or to myself. We all have a copy of this slide deck, and we'll be happy to share that with you. If you are an Advanta client, just reach out to your account manager, and they can connect with me for that slide deck as well, if that's easier for you. Either way, we're happy to get that information over into your hands. Next question I see here. What is your average, I don't know if that means dollar or cost, it's just the dollar symbol, / NRA in the Permian?
Well, that's going to differ. And then so I went over the track record, and we actually have one portfolio that's Texas. And then so what's unique about what we do is that we're a no debt company. And before we ever offer our minerals to you, the partners or our prospects, is we take ownership with the mindset that we're buying on our own behalf. So if there's ever a point in time where the price doesn't meet that criteria that I laid out, which is the 8 to 12% or the 1 to 2 max producing wells, we simply don't buy it. We'll never be in a position where we're accruing acreage just to feed the appetite of our partners. And we had the Lone Star portfolio that consisted of Texas mineral rights, but we're always on the lookout. And the way that Troy likes to say it is we've made 99 offers to buy Texas minerals, and only one got accepted. And so we're still in the process of identifying acreage that makes sense to us, is because most of the competition is going to be in Texas because the reserves are so massive. But if the price point doesn't make sense to us, we're going to pass. So I'd rather not say what we purchased those mineral rights for, but obviously if you participate within our portfolios, that information is readily available.
Understood. Next question here. For non-accredited investors, do you have any recommendations / insights on how I could gain exposure to investments similar to Eckard? And that question did come in before you just referenced that you guys are specialized for accredited investors. So do you have any kind of starting points that someone in that position that's not yet accredited could learn a little bit more, get into something like this?
Yeah, obviously, if you type in oil and gas where there's working interest, which is high risk, high reward, or you type in oil and gas mineral rights on Google, you're going to be flooded with all these different opportunities. The only thing I would say for someone that's not accredited and for these investments that take those type of investments is do your due diligence. And this is where Advanta can help you out, or you on an individual. Ask for their track record. Just don't jump in because you like the asset. You really have to be comfortable with who you're dealing with. One of the main benefits of doing business with us is we kind of overload you on information and data. So out of each of these portfolios, we have a unique online app that can be accessed through our phone or through desktop, which once you invest, and I'll just make up one as the Pacifico package, is you're going to have anywhere between 20 to 40 wells. Well, on this app, anytime, 24/7, you can log on and see how much revenue each well is producing. And so there's no question about what you own. So any type of investment you're considering, make sure you do your due diligence and make sure if it's mineral rights or whether it's working interest, you get documentation on exactly what you own.
Perfect. Next question. Is there a restriction on exiting the investment?
So I would say over 99% of our partners are looking at this as a legacy asset, but as an investor, obviously, one of the questions is liquidity. And then so we are opening up avenues to provide that means, and that's going to be through the app that I just mentioned. Is we're currently in the process of developing a peer-to-peer network. So we're roughly 1,100 strong as far as high net worth partners. And then so if there's ever a time that you would need to liquidate, which we recommend holding at a minimum of 3 years to really start seeing that activation, which again is the driver of these portfolios. But there'll be an avenue through the peer-to-peer that will allow you to put your package of minerals on the open marketplace for our network of roughly 1,200 to make bids on.
Perfect. Next question. How does this new offering or a new offering affect previous investors with your oil and gas offerings?
So again, each portfolio that we offer is going to be unique in location and area within the Anadarko Basin, which is a huge area. And so what we see is, and we always recommend, if you're a first-time partner or a seasoned veteran, is to get in as many portfolios as you can. Because that example I laid out is you'll have one portfolio that may see increased activation or increased revenue on the front end, but another portfolio may wait 24 to 36 months before you get off of that base 8 to 12%. And then so it's really not going to have an impact on participating in different portfolios, except that you're going to be getting revenue streams from, you know, more wells and more locations. So it's really diversifying your investment.
And just to add to that from Advanta's standpoint, if you're looking to make a new investment and you already have existing investments in your Advanta account, that would be seen as new investment paperwork and a new asset within your self-directed account. I've seen definitely different clients that have, you know, multiple different asset classes from David's, or not asset classes, I'm sorry, assets in general. From David's example earlier with the historical list of all the different assets they've held, they would each be seen as their own specific investment in your retirement account. So I hope that from Advanta's side as well provides additional feedback to the person that asked that question.
Yeah, and Corey, just to add on that is that just like that track record showed, each portfolio has its own unique name. And then so whether you're looking at your IRA account or through our app, it's going to show every investment. So it's not just going to be lumped into one package. It's going to differentiate between the package names.
Correct. And yeah, that's how it would be displayed in our system as well, which I'm sure you're aware of also, David, from dealing with us and investors. All right, the next question, this one's a little bit longer, so let me make sure I don't stumble on my words here. I have heard that shale plays only produce oil for a few years, but in your presentation, you said these assets can pay for over 20 years. Can you elaborate on how you are getting these mineral rights to pay for our multiple decades?
Yeah, and so anytime you see a shale well that's drilled, is you're going to have, imagine a Coke bottle that you shake up. So for the first 3 years, you're going to have this max input or production, which we call flush production. And again, that's why activation is key on these portfolios. So after the first 3 years, you start to see a decline curve, and then it settles out to pretty consistent production. And then so when we make our offers to purchase, that's where we're getting our 8 to 12% from, is based on this decline curve where it's effectively plateaued out and can continue to drill or produce for the next 25 to 50 years. To answer your question, I think it has to do with more of the technology that's been developed with the horizontal drilling, because again, the vertical wells, they only can take in to where that drain pipe is, or I'll call it a drain pipe, where it is. With horizontal, we're drilling now 2 miles long. And then so with the fracking, it allows for more product to come in. But that's why we see such a surge in value on these mineral rights, is because we're able to effectively produce this land.
All right, perfect. And just for the audience, I have 2 final questions. One of them is a really quick one. So if we've got a few minutes of time left, if you still have a question you have not heard yet or that you want to ask, please feel free to type that in right now. David and I have a few more minutes. We're happy to facilitate, but if we don't see anything pop up, or if we hit the 1 o'clock mark in about 8 minutes or so, I'm going to go ahead and cut the webinar at that point. So David, if you want to go ahead, someone asked what's the website again, if you want to go ahead and give the URL out one more time.
Yeah, it's going to be eckardenterprises.com. And just to go over the the sign up structure. So if this is of interest, reach out to us directly, and then we're going to make sure that this is a good fit for you on the oil and gas side. But like you kind of mentioned, Corey, is the process is super simple. Is once you realize the amount of allocation, we're going to send over what's called a purchase sale agreement. And then this is going to be our actual purchasing contract. And we send that over to your email for e-signature. And once that's signed, it gets kicked back to us for counter signature. And then it goes to Advanta. And then once funding takes place, is you're going to receive purchasing documents in the mail. But one of the benefits that we offer is you're not exposed to these operators. You're not familiar with the title that's necessary to get into pay status or check production figures. Is we offer that at no cost to you. So out of all 78 portfolios that we offer, we take a 10 to 20% ownership out of each portfolio. And so we always call our clients partners, is because essentially that's what you are. We own alongside you. And since we're doing the legwork as far as maintaining these production data, maintaining our pay decks to make sure we're getting paid down to the penny, we manage that for you at no cost. And this is for the life of the investment, so in perpetuity.
All right, so the next question here. Also, for taxable accounts, what is the tax reporting? A K-1 form or just a 1099? Does your firm produce the tax forms?
Yeah, we do. So this is going to be a 1099 passive income. Everything is strictly passive income. There's going to be no K-1s, but yeah, we provide 1099s.
Perfect. And then I believe in context that actually answered this next question that came in. So are you saying that you can only do this through a self-directed IRA? I'll jump up front of David. That is not the case. You can do this with outside IRA money. David, if you want to expand on that further, just the different type of investors you guys see, even setting aside self-directed retirement investors.
Yeah, no problem. So like I mentioned, this is going to be similar to real estate and IRS or IRS. So this is actually 1031 eligible. We've had a bunch of physicians and dentists sell practices or folks selling their properties and looking for a stable asset to get into. And so we do a lot of 1031 work, obviously IRA eligible, and this is going to be cash. So those are going to be really your three ways to participate within our portfolios.
All right. I am not seeing any further questions at this moment. I think it was about 4 minutes ago when I last asked the audience to pop in with anything. So I think we're at a good stopping point here. David, I want to thank you again for working with me to coordinate this webinar and bringing, with the help of Troy, bringing some great education to our audience. Any final parting words you have for the audience, or anything you want to kind of close out with from your side of things?
Yeah. I want to thank everybody again for tuning in. And I hope that through this presentation, we're more on the educational side of things. But if you'd like to learn more, just give us a call at 1-800-527-8895 or visit our website and ask to speak with myself or another wealth manager. And what we can do is take you through one of the individual portfolios to kind of tie everything together to see how we create value and how each portfolio is built. So again, I want to thank you all for tuning in, and I look forward to hearing from some of you.
Awesome. Well, thank you so much again. I hope everyone was able to get some great information here. Reach out to David and his team over at Eckard Enterprises if they can help you any further with mineral investing. And stay tuned if you have any other interest in self-directed investing. We put out these webinars all the time. Reach out to our Advanta team if you want to get started with a self-direct account or want to learn about any specific investment strategy further. We've got plenty of content like this webinar that will be posted on our YouTube page within the next day or so, and we're always happy to help however we can. Thank you very much, everybody. Have a great day. See you next time.